Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. We are back with another episode of the Real Estate Investing Club. Today we have James Nelson with us. James is the principal and head of Avison Young's Tri-State Investment Sales Group based out of New York City. Sounds like James is trying to get into my market, which is great. We always love to have new investors here in Seattle. James comes at us with tons of experience across all the different asset classes. He's a broker. He has done LP investing. He's a GP on investments. So James brings the experience. He brings the wisdom. I'm super excited to jump in and hear your story. James, thanks for hopping on the show.
Awesome. Thanks so much for having me, Gabe. And always great to meet a fellow podcaster.
Absolutely. I told you before we got on here, we like to start with stories. We like to hear how people got to where they are. I know you got a good one. So why don't you take us back to the beginning and tell us how you got in real estate?
Sure. So I went to Colgate, class of 98, and was a swimmer there and an English major, and didn't really know real estate was a thing. And by my senior spring, when all of my friends had investment banking jobs in the city, I said, well, maybe I should get serious. And I thought maybe I'd go out to the West Coast and make some movies or something. But then I realized that no one was actually paying any salary to do that. So I went up to the Career Service Center. And fortunately, there was a job posting to be a sales associate for Massey Knackel Realty Services, co-founded by Paul Massey, a Colgate alum. And as luck would have it, the day I was up there was the day that the resume drop was due. And later found out that only 2 people applied for the job, and I was their second choice. So we always joke that I started. Fortunately, they took both of us. So we always joke that I started with very low expectations, but I guess I proved them wrong. And ended up after 17 years with them, and they were kind enough to elevate me as a partner. When I joined, we had 20 people covering really just Manhattan. And by the time we sold the company to Cushman and Wakefield, we had 4 offices, 250 people, and we were selling 3 to 4 times the amount of properties as the next investment sales firm here in New York. So went on, had 3 more great years at Cushman and Wakefield, and then got this great opportunity to build out the investment sales platform at Avison Young. We're a Canadian company that came into the U.S. about 12 years ago. We now have 60 offices here. As I said, we have yet to open up an office in Seattle. We really need to change that. You have a great market out there. But in addition to brokerage, investing is my passion. In addition to being an LP on dozens and dozens of transactions, I'm also a co-GP in multifamily product here in New York. And then I've also launched 2 real estate funds to put out JV equity for value add deals here in the city. So a little bit of everything over the years. So great to be here.
None at all. And, we're going to talk a little bit more about this at the end, but I know you got a book coming out, The Insider's Edge to Real Estate Investing, which is the same title as your podcast. So if you guys, if you don't make it to the end, just know he's got a book, and check out his podcast, The Insider's Edge to Real Estate Investing. We'll swing back and check that one out at the end. So before we do that, I had a few questions. Your story is great. And not intimidated is the word, but I have respect for anybody who is in the New York City market, because I just feel like New York City is just another beast when it comes to real estate. You guys have so many, high rises, and it's quite its own monster out there. So if you make it in New York City, as they say, you can make it anywhere, and you are a testament to that. It sounds like you've had a lot of experience and success across all these different avenues of doing real estate. And I always say one of the real reasons I like real estate so much is there's so many ways to go about making a business in it. But it always starts with sales. It always starts with, finding good deals and executing on those good deals. Brokerages, you guys are the expert of the sales process. So why don't we start there? You've had it on the brokerage side. I'm sure you've had it on the buyer's side. What is the kind of the top tricks, or I guess what makes a successful acquisitions pipeline when it comes to finding good deals for investments?
Sure. So I think specialization is really the key. And now, after been doing this a while, I've built out this incredible team. We have close to 36 professionals who, yes, are organized by different asset classes. We cover the New York area. But when I started in my career, credit to the founders of Massey and Ackle, they had a territory system. They took New York City, they chopped it up into 50 territories. And I studied Chelsea, which is in downtown Manhattan. And what I found was if you spend 3 to 6 months intensely studying an area, knowing everything about it, all the sales, where rents are going for, zoning changes, new developments in the area, you will find that you will know more about that area than even some of the veterans who've been in the business for decades as generalists. So, there's that old expression, jack of all trades, master of none. And so, and that is one of the things I talk about in the book. When you're starting off, pick something to specialize in, a geography, an asset class, and that will really help give you the advantage.
Yeah, absolutely. And that's been something that I've struggled with, or I did struggle with when I got started, was I had that shiny object syndrome. And I just, there's so many different asset classes, so many things to do, and I just wanted to do it all. So when you suggest people specialize, you mentioned both asset class and location. Do you say you're a new investor, they want to go and start investing in, they don't know, they just want to start investing in commercial assets and single family. How would you recommend that they choose specializations? Do you start with location or do you start with the asset class?
I think it's always easiest to start geographically in your own backyard. So if you have, if you're doing business, you've grown up in a certain area, you already have that advantage because you kind of know the drivers, what's going on in the area. You also have an idea of kind of what's changing and what's needed for an area. As far as what asset class to pick, and I also talk about this in my book, it really depends on how much time you have, what is your risk profile, right? So, there's ways to get into this business passively, and I do a lot of that where I'll invest with clients as a limited partner, all the way up to owning, multifamily properties, hundreds of units that you own and operate yourself. So you really have to first assess, hey, is this going to be a full-time thing for me? Do I have the proper platform to do this? Do I have the right capital to do this? So, a lot of investors, they start with multifamily. It is the safest asset class, and that people always need a place to live, right? And if you go in and you buy a 10, 20, 100 unit building and you lose one tenant, you're usually not waiting years to find that next tenant, where, depending, with retail, depending where you are, yes, you could be waiting a long time. Office, and we could do a whole show on that, but, it seems to be still very up in the air with the return to office, the new hybrid. But more importantly, certainly for the first time investor, I mean, it's such a capital intensive business with the amount of work that you have to put into a building and to incentivize a tenant. And then really kind of the last is development, which I tell, new investors to steer clear of, because there are so many things that can go wrong in a ground up development. So, and there's of course other specialty assets, medical, industrial, data centers. But yeah, I think to start off, I think multifamily is probably what most people are comfortable with, or a mixed use deal, maybe something with a store and apartments above.
Yep. Multifamily is the tried and true for sure. We didn't mention this before we got on here, but I specialize in self-storage, and mobile home RV parks. It's definitely kind of one of the niche real estate market or asset classes out there. And we're actually just starting our first ground up development, which is, you're right, it's a new ball game. It might be my only ground up development because it does require quite a bunch of, it's more intensive than buying and flipping a property on its own. So, you've had experience across so many different assets. Do you have a favorite when it comes to, the one that you specifically look for?
Well, I'd say I'm probably a little bit of a contrarian. I've been loving retail for the last couple of years because, just watching it get hammered with e-commerce and then COVID, and it was like the death of retail, right? And yeah, it got really bad. And, here in New York, even High Street, if we're talking, Times Square, Soho, in some cases over the last 5 years, rents, at first they went up 4 or 5 times, and then they dropped, down to 10, 20%. And so you have, wow, rents that are having these wild swings. And, retail is so specific to the location, the type of store, even, the position on the block. And if you really understand, what retail tenants are looking for, or better yet, align yourself with a couple of retail tenants. There's a billionaire, Jeff Sutton, in the New York market who made his fortune by creating, having really strong relationships with brands like Payless Shoes or Walgreens. And he would go and buy distressed vacant retail at a discount. And day one, he'd put in that tenant, and almost overnight, he doubles the value of the property because now, he's got that credit, makes it easier to finance. So I still think that's a great opportunity today.
Interesting. Yeah. A lot of people are kind of steering clear of retail. I always thought like strip center retail would be a lot of fun. Obviously I'm not doing it, but I thought it would be fun just because there's so much that you can do to the property itself to add value, to kind of make it for specific tenants. So I'm not going to start talking about that because I don't have the experience, but it sounds like you guys are definitely going down that route. So on top of assets, you also, you invest in different ways. You're an LP and a GP. Let's talk about being an LP, about investing passively in other people's properties. How do you go about choosing the project that you want to invest in? What are kind of like the top three things that you look for?
So first and foremost, it's always the sponsor, right? So, to me, if you don't have a strong, trustworthy sponsor, it's an automatic non-starter. It doesn't matter how amazing the deal is. You have to have the right team who can execute on this, right? The next is obviously the deal itself and doing the underwriting and really not just taking for granted whatever's in that investor memo, but doing your own diligence on where the acquisition price falls, and then obviously the business plan. Do they have the right idea to reposition the asset? So those are really the three things. And I've done this for individual deals, but the most extensive investing that I've done, it was a partner in two real estate funds where we went out and we raised $50 million and invested in a total of 36 deals that had total capitalizations for over $300 million. And so had an opportunity to work with a lot of different sponsors. And it's so important to do that research, that diligence on the sponsor, especially if times get challenging. Sponsors, if you've been doing this long enough and you're active, not everything's going to be a win. But the question is, when things don't go as planned, how do they behave? And how do they behave with their investors? And I think the last piece is really just communication. There's some deals where I've invested in, and I always have to chase the sponsor to find out what's going on. There's others who have quarterly updates, great reporting. They stay ahead of the curve. So I don't have to, wonder what's going on with the deal.
Yeah. Yep. That makes complete sense. We're actually just doing our first syndication coming up here soon. So it's exciting to learn about what other people, the positive experience other LPs have with the deals that they've invested in. Okay, so I did check the clock. It looks like we are running down that timer on the 15 minutes. So I do have to push us into the quick question round. Are you ready?
Yes.
Let's do it. It starts with books. I'm a big bookie, so give me 2 recommendations, one for general life wisdom, one for real estate specific. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Wow. Okay. So I would say one of my favorite books for wisdom is Adam Grant, Give and Take. He's a Wharton professor and just, it's just doing good. And that's a lot of what we're doing right now on the show, is putting out information out there to be helpful for others. As far as investment books, I'm a big fan of not only Rod Santamassimo, who's still one of my coaches today. He wrote a book called Brokers Who Dominate, but also another friend, mentor and coach of mine, Blaine Strickland, who wrote Thrive and Adapt on really the future of real estate. So sorry, I know that was, I mentioned 3.
No, it's okay. We're not going to, 3 good recommendations. We always appreciate that. So Give and Take, hadn't heard about that one before. I'll have to check it out. Thrive and Adapt, about the future of real estate. Definitely sounds interesting. What was the third one again?
Brokers Who Dominate from Rod Santamassimo. Actually, for this audience, maybe Knowing Isn't Doing. That's his latest book. And that will, the Brokers Who Dominate really applies directly for brokers, but for investors, Knowing Isn't Doing. The title's pretty, self-explanatory, but I think you'll get a lot out of it.
No, I just by that title, I feel like I would like the book because it is so true. And especially for new investors, I feel like it's so easy to get into the analysis paralysis thing. You can learn so much, just keep reading books and watching YouTube videos and all that stuff. But when you do your first deal, all of that, things will come out of the woodwork that you never experienced and was not in the book. So I like the title. I haven't read it, but it sounds like something I'd like. All right, moving on. This is the next question is for your younger self. So let's go back to the James, who was still on the swim team back there at Colgate. He was just looking for his first job. Go to him, look him in the eye, give him one piece of advice moving forward.
Well, I didn't know it at the time, but I was super lucky because the person that I started my career with, in fact, I just came from a lunch with him. So, 25 years later, Paul Massey, Bob Knackel, who was his co-founder, they continue to be mentors of mine. So, don't just go for the job that gives you the biggest paycheck. You got to think long-term. It's about working with incredible people and, really to think long-term. So I was very lucky, but that's what I would have told myself going back.
All right. And I'm actually going to skip questions. Usually this one is later on, but I'm going to ask it now because you've already touched on it. None of us are islands. We all stand on the shoulders of giants. So who is one mentor who is pushed your career along to where it is today?
Well, my late grandfather was completely self-made, started at 17 years old, had a child, had to support his family. And so, he just did whatever it took to get by. He actually started selling cars on the lot, worked his way up, became a manager, ended up buying dealerships and ended up on the board of GM. So really, the rags to riches story, but he was the ultimate deal maker and he loved real estate. He always said, James, they're not making any more of it. And he loved buying, selling homes. And, interestingly, I didn't realize what he was doing at the time, but all the dealerships that he opened up, he would buy the land and then lease it back to himself as a business.
The McDonald's model. I love it.
Yes.
All right. Well, shout out to James' grandfather. Thank you for helping him get to where he is today. Moves us to the next question. This is our Superman strengths. We are all gifted with strengths that we uniquely give to this world. So what is your Superman strength?
I'd like to think that I lead by example. I don't know where I get the energy to do it, but I do. It's just a love, a passion for what I'm doing, and I just every single morning I'm up, I'm out there, and I really love what I'm doing. So I would say my energy probably. The fact that I'm still doing this, getting up at 4:45, 5 o'clock in the morning. Getting my workout in, getting on the train, coming into New York, an hour 15 each way. And, the day goes nonstop, but having so much fun during it that, the time just flies by.
Nice. I love it. And that's the beautiful thing about doing something that you love, that you find purpose in, is that miraculously the energy just appears. You don't have to worry about getting it. Obviously you need to take care of your body, but if you're really into what you're doing, the energy will be there. So love to hear that. And that moves us on to the second to last question. This is about location. The United States, it's a huge area, a lot of square miles out there. Give me one metro you're most excited about investing in today.
Well, I've got to say New York.
Of course.
I've spent my entire career here, and Look, New York has actually taken a lot of flack over the last 5 years, and I have witnessed a lot of our investors leave, mostly for the Southeast. And the reason being is, look, we have a challenging political environment to do business. We have rent regulation. Building can be very challenging, right? And so I think a lot of investors said, well, hey, I'm not going to fight this uphill battle anymore. I'm going to go down to the South. I'm going to go buy apartments there. And yes, it is easier in many cases to build and add square footage. But then also, I think what makes it so easy also, you end up seeing a lot more competition down there where the barriers to entry are very challenging in New York. And I think some of these recent changes, whether it's regulation, they're priced in, and so you see today, you hear about down in the Southeast, 3-4 caps. I wouldn't be surprised if that's what your market was trading at. I mean, we got 5s and 6s in New York, which is pretty amazing to hear. And, even in challenging times like this, with this run up in interest rates, New York is still known by investors around the world. And it always amazes me that when things get tough, that is actually when the foreign investors kind of pile in to say, hey, this is our opportunity to come in and buy. And, they're willing to take a long-term view. So, I've never had to look really outside my market. Occasionally I'll have a client who wants to sell a building. We sold an office deal down in Nashville, and I'll bring in my local team to partner with. And I do a bunch of stuff down in Florida as well. But, 95% of what we're doing here is New York City. So I'm not going anywhere.
Yeah, no, that makes sense. In fact, one of the really successful self-storage guy that I know, he, King County, where Seattle's located, is notoriously difficult to deal with when it comes to development. And he says he loves that because it makes it harder for other people to come in. And the harder it is, that means the better deals you'll be able to find. So totally makes sense from a New York perspective. And especially since you've lived there so long, invest in your back door. That's the common knowledge there. But that leads us to the very last question. And this one's for the listeners. First, tell us a little bit about the book, what people can expect when they open it up. And then second, tell us the best way for people to reach out and get in contact with you.
Awesome. Really appreciate that. So The Insider's Edge to Real Estate Investing. Again, that's the name of my podcast and my upcoming book, which McGraw-Hill is publishing. It's releasing at the end of January, so you can actually go and pre-order it right now. And by the way, you can find out all my stuff at jamesnelson.com. That's where you can find my podcast, video series, and as well as the ability to pre-order the book. And this book, and part of this came out of the lessons I'd learned in the podcast and as a broker and as an investor. But I also do a lot of guest lecturing. So I used to be an adjunct professor at NYU. I've guest lectured at Columbia, Wharton. And what always amazes me when I speak to these real estate professors is I ask them, I said, what's the book? What is the book that you assign to your teachers and your students rather? And amazingly, almost none of them have a book. They said, well, there's this resource. I grab a chapter here, or I've got some handouts here. Here's my 3-ring binder. And, it dawned on me, there's very few books, how to from start to finish. There's a lot of books on how to invest that are very specific. Maybe, how to invest in multifamily or how to build self-storage or whatever it is. But there are universal principles on how to go about investing really, and it is step by step, right? So I've written this book in case you've never invested in real estate at all, or maybe you're in the business, maybe you're a broker and you want to get into investing, but maybe you're also a veteran and you're watching other people pass you by and you want to step up your game. So, I believe, and the reason why I call it the insider's edge is because you can gain an edge in this business to outperform the market. This is not like investing in the stock market. You and anybody gets the same information when buying a stock, right? And we can all go and find out where a share is trading at any minute of the day. But there could be 2 storage opportunities in the same area and one's worth double. And maybe that's because the way it was built, maybe it's the ceiling heights, maybe it's the tenancy. And having that knowledge, right? And the ability to build the right team, to have the right people to find these opportunities, you really can outperform the market. So, that's the whole point. There's a lot in there, not only about finding opportunities, how to work with brokers, how to raise capital, how to finance deals, how to improve upon them. There's really, I'm hoping that after someone reads this book, they will absolutely have a roadmap and know where to go.
Perfect. And where can they reach out and find that book, where they're going to be able to buy it?
So if you go to jamesnelson.com, it'll give you the links, but you can also just go straight to Amazon. If you go to Amazon and type in Insider's Edge to Real Estate Investing, you can get it there.
Perfect.
And then as far as connecting with me, and I love putting out a lot of content to be helpful, James Nelson NYC. You can find me on Instagram as well as LinkedIn, and I'm starting to get more active on Twitter again. So stay tuned on that.
All right. Well, I will put that link in the show notes, jamesnelson.com. If you guys want to reach out to James, maybe get his book, go ahead and click a little more in the description. It'll pull down the description, and in there you can find James's link. So, James, that wraps it up. Again, thank you very much for hopping on the show.
Gabe, thanks. This was a lot of fun.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. And if you want to support the show, the only thing we ask is that you leave us a review on Apple. Other than that, hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.